Data Patterns, a leading defense and aerospace company, gave a quick 140% return in just 7 to 8 months. But for the past 3 months, it has been consolidating and it has dropped by 25%. But now could be a very good opportunity for the interested investors to invest in this stock. So should you invest in Data Patterns? Let's find out in this video, where I will do the complete analysis by taking you first of all to its official website and showing you what all products it manufactures. Then we'll go towards the fundamental side and see how strong its fundamentals, and then we'll go to the most interesting part, that is the price action. So make sure to watch this video till the end. Let's get started. Okay, hello everyone and welcome back to another video of Financial Impulse. So in this video we are going to do the analysis of Data Patterns. So first of all, this is the official website of Data Patterns, and as you can see, Defense and Aerospace Electronic Solutions Company. Okay, so first of all, let me just give you a highlight of what product it manufactures and it works on, and you can go through details once I share this official website. Okay, so here I have hovered the mouse on the product list and you can read all these details. Okay, electronic warfare, avionics systems, space system, power supply, naval systems, launch and fire control systems. So as you can see, all these are pretty important parts for the defense sector and aerospace sector. Okay, I will share this link as I mentioned, and you can go through it in details to know more about it. Now let me take you to the fundamentals part. Okay, so this is Data Patterns, and we can clearly see that first of all I want to highlight that if you follow the strategy of considering price to equity ratio, PE ratio, then you can see this stock's PE ratio is 74.4, whereas the industry PE is 81.3. So this is clearly telling that Data Pattern is actually at an ideal level. But obviously personally I do not follow this the PE ratio valuation, because when a stock actually starts trending, the PE actually goes very high. So I would say just give little importance to this one and give more importance to year on year sales, earning per share, and also price action. So let's go to the important part. So coming to Data Patterns, here you can see it is currently at 1970 rupees. It is trading at 1970 rupees with a market cap of 11,000 crores. Reserves is 1190 crores and a very small debt, almost negligible, of 2.7 crore debt. That's why the debt to equity ratio is 0.00, debt to profit ratio is 0.02. Excellent number, fantastic numbers. Interest coverage ratio is 23. This is also excellent. Return on asset is 11.52, return on equity 14.17, and return on capital employed 19.60. These are also excellent numbers. Current ratio is 5.10. This is awesome. This is just excellent. Operating profit margin is 38.19, and if you observe closely, this is the highest in its industry. You can see no other company is coming close to it. The median is 10.55. Let me scroll a little bit up, so you might not be able to see it. Okay, so you can see this is 38 and the median is 10. You can see other companies like Bharat Electronics is having 24.11. Okay, and now coming to promoter holding, it is 42.41. Okay, this is decent, although not a very good but decent number. Altman Z score is 14.74. so this is clearly telling that the company is far away from getting into solvency issues. Okay, now let's see if the company is growing year on year or not. So profit and loss. So we can see we'll focus on the past 3 years performance, and additionally we can look backward or forward after that. Okay, so for the past year performance, we can see sales in March 2021 is 224, then it went up to 311, and then to 453, then 495. So clearly it has been growing for the past 3 to 4 years. Operating profit went up from 92 to 141, then to 172 to 189 in the trailing 12 months. Operating profit margin, it was 41%, then it went up to 45%, then it dropped to 38%, and it has been 38% for the past 2 years. Okay, and hopefully the operating profit margin will increase in the future. Okay, now coming to earning per share, we can see clear increase in earning per share from 18.11 to 22 and then to 26. Okay, and this is clearly telling for the past 3 years the company has been growing. Okay, it has been growing, its earning per share has been consistently increasing. That's why the appreciation in share price is a valid one, and obviously we should expect that the share price will continue to go up. Okay, Now let's come to the shareholding pattern and see what the FIIs, DIIs and promoters are doing. Okay, so excuse me. So we can see in the past 3 quarters, the promoters have not changed their stake. Okay, it is almost 42.01%. We can see that they dropped by almost 3% here. Okay, after that they have not changed, but at the same time we can see there is huge increase in FII stake. Okay, it went up from 2.3% to 5.08% here, then to 5.32, then in the last quarter 7.17. So this is a clear increase in stake by the FIIs. Now coming to DIIs, you can see it went up from 7.90 to 11.64, then to 11.11 here, then to 9.55. So we are getting to see pretty interesting figures. The promoters dropped their stake by 3%. Okay, but FIIs and DIIs have increased their stake. You can see from here to here, this is 5% increase, and from here to here, it is almost 1.5 to 2% increase. So this is actually in favor of the company. So that means the FIIs and DIIs have accumulated more shares than the part where DIIs have dropped by 3%. Okay, so this is clearly telling us that the big institutions are actually interested in the stock. They are taking positions, they are increasing their stake. So that's a good news. Okay, so now to sum up the fundamentals part. Okay, Data Patterns is actually looking fundamentally strong. It is almost a debt free company, in fact a debt free company. 2.70 crores debt is nothing actually, and also it has been growing for the past 3 years, 3 to 4 years, whereas the shareholding pattern has also increased. Okay, the FIIs and DIIs have nicely increased their stake. So that's a good news. So the fundamentals of this company are strong. This is the key takeaway. And if you are watching the video so far, I request all of you to please hit the like button and subscribe to Financial Impulse if you have not done already. Now let's go to the price action. So this is Data Patterns, and you can see some quick rallies. You can see after getting listed here, the Data Patterns gave a quick breakout here. Okay, and this was a very good rally. Okay, then it came down, a huge pullback, then another big rally. Okay, so let's measure what percentage return Data Patterns gave during this rally. So I'll measure from here, from the low to the high. This is 125% in 119 days. Very good performance. That is just 3 months. You can see in 3 months it went up more than 100%, and this is 145% return in 252 days. Okay, this is also a very fast and quick rally. So pretty good. People who made entries here definitely made a lot of money. Now the stock has been consolidating around this level, 1823 level. So why is this level important, and why am I making a video on Data Patterns right now? So you will get to know that once I quickly enable the 40 weeks moving average. Okay, and you can see how nicely the stock is resting on the 40 weeks moving average. And you know what 40 weeks moving average is. Okay, it is the 200 days moving average. Okay, and that is the last line of defense. In fact, if you buy a stock at 200 days moving average, then I would say that is the best possible entry you can have. Okay, at a very good price. So let me just quickly go to the daily time frame. Okay, so here is the daily time frame, and I will enable the 200 days moving average, and you can see the same thing. Okay, the stock, as soon as it hit this 200 days moving average, you can see some sharp bullish price actions. Okay, it came down here, again sharp bullish price action, again came down here, and now we are getting to see again back to strong green candle. So this is clearly telling that the stock is actually reacting to the 200 days moving average. Okay, which is a good thing, and I would say this is the best place to buy this stock, and in future you might not get this stock at this level. Okay, at 200 days moving average. Now let us first of all measure this drop. We will obviously use the fib retracement tool to decide if this is a good point for entry or not. Okay, so I have drawn the fib retracement level, and you can see that this pullback is actually staying way above the 0.5 level, that is 1744. So that clearly is telling that this initial trend, this initial rally is actually strong. This is a strong rally, and very soon it will continue its way up. Okay, this is what it is clearly telling us, because the price did not come down to here. Okay, if it would have come down to here, we could have concluded that the rally is weak, and it might take some time to go above 0.5, then to go above 0.618, but it has been very consistently staying above this 0.5 level. Okay, that's a very good level, and along with that, if I enable the 40 weeks moving average, again it is providing support. So I would say this is the best possible point where you can make an entry in a stock which is debt free, which is the industry is growing, and also the fundamentally the stock is fundamentally very strong and has been growing year on year for the past 3 to 4 years. Okay, this is the best possible entry. That is the conclusion from the price action. You might not get the stock at this price, and you can if you are a cautious investors and you want to make entries only after confirmation, then I would say mark this level 2110, and as soon as the stock breaks above this level, then you can make your entry if you are someone who likes to make confirmed entry. But if you are already owning the stock at a very low price, or if you are a new investor to the stock but still want to make some early entry, you can definitely make an entry right now. It won't be a problem. You will get it at around 1973, the price of the stock as per recording of this video on 9th January. Okay, you will get it at 100 and 120 rupees or 150 rupees cheaper than this breakout price. Okay, so and if you are making an entry right now, make sure not to put the entire money right now. Just make partial investment. Okay, 30% or 50%. Do not invest more than that. Do not dump the entire amount right now. Do 50% right now, and the remaining 50% you can keep for the breakout to happen above 2110. Okay, that will be the best approach for investment in data patterns. Okay, now for swing traders and positional traders, you will definitely be looking for some targets. So I will definitely give you some targets using the fib levels. Okay, so if you are making an entry right now, let's say the price is 1973, you are making within 2000, then the first target will be 3100, this 1.414 level. Then that will be a return of around 57%. Okay, that's a very good return. And then the second target will be 1.618, that is 3400. Okay, and that will be a return of around 70% almost. And the next target will be 3992, that is almost 4000. Okay, and that will be a return of more than 100%, almost 100%. So these are the levels you need to take care of and mark as your exit points. Okay, 3100, 3400 and 4000. Okay, these are the three levels for exiting in this stock if you are a swing trader or a positional trader, or even if you are an investor and you still want to exit at some definite point, you can do it at that level. But if you are someone who wants to stay with this stock as long as it goes up and do not want to exit early, then the best thing will be to follow the 40 weeks moving average. Okay, as long as the stock stays above this, okay, stays above this, and the price action continues to stay above it, you can stick with the stock. There is no problem at all. Once the 40 weeks moving average starts turning downward like this and the stock price falls below it, then you can exit. Okay, but there is one more approach. If you are both a positional trader and investor, then I would like to suggest that you exit partial of the partial position you can exit at 3400, that is 1.618 level. The remaining half, okay, or the remaining positions you can exit when the stock falls below 40 weeks moving average. In that way you can maximize your gain along with minimizing your risk, because you are exiting half of the positions. Okay, and if you are exiting at 1.618 level, as I showed, you will get 70% return on your investment already in half of the stock. Okay, and the remaining you can trail with the 40 weeks moving average. Okay, so that is all about data patterns. I hope this video was helpful, and the key takeaway for this video is that if you are someone who believes that the defense sector stocks are actually going to rally and they have a very good future in this developing country of India, then you definitely should make an investment in data patterns. And the reason being, it is at the perfect place where you can buy and the lowest possible price. Okay, unless something extraordinary happens like a war or something, or a market crash, the price action is looking to be getting stronger and stronger near the 200 days moving average. And if you make an entry right now, that will be an ideal entry point. Okay, and also as I discussed, just divide your investment, like taking partial entry right now and the remaining above 2100. That will be the best approach. So that's all for this video. Thank you for watching. I hope this video was helpful and informative. Please hit the like button and subscribe to Financial Impulse if you have not done already. And don't forget to watch the other videos in my playlist, especially the recent ones. You will definitely find some stocks which are worth investing right now. Thank you. I'll meet you in the next one. Bye. Take care.